Good morning, everyone, and thank you for joining us. My name is Jason Cogdell. I'm the General Counsel and Benefits Attorney for ProBenefits, and it's my pleasure to come to you today for our final webinar session of 2017. And traditionally, what we do in the final webinar of the year is to do a fairly efficient benefits compliance update, a minor look back. We won't spend much time looking backwards. We'll spend more time looking at what is important right now and then looking ahead to 2018. And as part of this session, we will share a one-page benefits compliance checklist for 2018. In fact, if you will look on the control panel under the handouts tab, you can access a PDF copy of the one-page benefits compliance checklist. And again, we'll email a copy of that to you if that would be helpful. So thanks for joining us today. As always, we're on GoToWebinar. So for better or worse, the quality of the sound is entirely dependent on an internet connection. But if at any time you can't hear clearly, make sure that your computer speakers or if you're listening through the speakers are turned up all the way. And if it for some reason disconnects, just reconnect and get back in. Your questions are welcome. I will get to some of them during the session, but I will try to finish early. And then those of you that want to hang around and submit questions either on the ACA, the new tax law, anything, I can cover those at the end before we dismiss today. So again, thanks for joining us. And as always, we will make a copy of the slides and a YouTube format of the recording available to you in case helpful to you or another member of your team on another day. Without further ado, I want to give a brief update on the ACA and the news of the day. But to put that in context, I thought we would do a very short and simple 2017 in review from a benefits compliance perspective. Reviewing the year could be very detailed and very lengthy. I don't think we need to do that. I tried to boil this down to 4 simple points. This was 3, and a new one will be added today, as I think the most recent big story of 2017 is the new tax law that Congress will vote into law today, the Tax Cuts and Jobs Act of 2017, which is expected to be voted in by both houses of Congress today. That tax law will have some minor employee benefits impacts, and I'll come back to that in a moment. The biggest news of the year is that the ACA was not repealed. This time last year, after the election and heading toward January inauguration in the new term of Congress, it seemed certainly likely, not automatic, but very likely, that the ACA would be repealed in whole or in part, and that has not happened. So that is by far the biggest news of 2017, that there is still an Affordable Care Act, which applies in 2018. And so as we look ahead to 2018, this is both the biggest story of 2017 and the biggest story of 2018 already. The next biggest story, I think, is that the Department of Labor overtime rule, which we were all planning for this time last year, did not transpire. It was delayed by the agency after the election last year, and that has gone nowhere. In fact, the DOL is reassessing what a new overtime rule may look like, but I don't know if we'll know about that in 2018. It may be some time before that overtime rule applies. And COBRA compliance came back on the radar in a major way in 2017 with litigation in a number of jurisdictions, including class action lawsuits filed against employers and plan sponsors not following the rules regarding COBRA compliance, and particularly not complying with the requirements of the 8 categories of required notices for COBRA continuation. And that's something I think we'll continue to see in 2018. As it relates to the ACA, not much I need to say. The same old song still rings true. The ACA is the law of the land, and we as employers and advisors should continue to follow the law, continue to do what we can to comply unless and until the ACA or specific parts of the ACA may be modified or repealed. The biggest thing continues to be the employer mandate, employer shared responsibility, or play or pay, which continues to apply to employers that had in the prior year an average of 50 full-time employees plus equivalents. Play or pay has not gone away, and that means the 30-hour rule and the affordability rule, which is 9.56% for 2018, still apply to applicable large employers, not employers under 50, but applicable large employers. That also means the reporting rules still apply. And the reporting deadlines are now only a month away for the 2017 calendar year. So both applicable large employers that were subject to player pay in 2017 have to comply. This IRS Form 1095-C, which is provided to employees that were full-time during the year, and IRS Form 1094-C that goes to the IRS. So applicable large employers have to report, no surprise there. But for any of you that are small employers, not applicable large employers, not subject to the mandate, if you sponsored a self-funded or level-funded type plan in 2017, and if that self-funded, level-funded carrier provider TPA did not file the B series reports for you, 1095-B to individuals that were enrolled, 1094-B to the IRS, then you, the employer, are responsible for that on the same deadlines. So the deadlines are these, that 131 is the deadline, just like W-2s, that the 1095-C or B has to be provided to the individual employees or former employees, and February 28th is the deadline for hard copy filing of the IRS submittal 1094, and that deadline is April the 2nd for employers that are filing electronically. This is all on the compliance checklist that I'll show you in a moment, but want to just go ahead and get that out of the way as a key ACA update and a key item for early 2018. Other big news. Hopefully you know about this if you work for or represent an applicable large employer, and that is that in November, for the first time, the IRS has started enforcement of player pay. And specifically what the IRS is doing is sending letters. They're called letters 226J, sending letters 226J to employers that the IRS has identified as owing a mandate penalty for 2015. So they're starting with 2015, which is the first year of the mandate. By the way, in 2015, the mandate only applied to employers that had 100 or more in the prior year. And then starting in 2016, it dropped down to 50. They will get to 2016 and 2017 eventually. The enforcement is entirely based on the reporting, along with the database of what tax ID numbers are receiving subsidies at the marketplace. But these letters 226J are going to large employers and other ALEs all over America. And they include a statement that the IRS believes the employer owes a penalty and what that penalty is. And I have now looked at with my own eyes probably 15 or 16 of those letters, and I have seen penalty amounts that range between $20,000, the smallest I've seen, and $2.5 million, the largest I've seen. So this is a big deal. If an employer gets the letter, it has 30 days from the date of the letter to respond. If you have received such a letter, then I hope that you are working briskly on a game plan to reply and to document to the IRS that you don't owe a penalty, hopefully. If you have not received a letter, know that you may. And so you need to have a game plan in place that if you receive the letter, that needs to go into effect quickly. If you would like to see a sample letter, I'll be happy to share that with you, or even not even the template, a live version of the letter redacted to not include employer information. But this is a big, big deal, because since player pay was not repealed, the ACA was not repealed by Congress, this is still the law, and the IRS is trying to enforce the law. And obviously, this is a big revenue deal for them as well, so I don't expect these letters to stop going out. So employers need to know that this is happening, and they need to know that this could be something that you have to deal with. Now, the development of today. Before we get to end of the year in 2018, I'll say a couple of words about the Tax Cuts and Jobs Act. This is the new Republican tax bill that over the last week or so has been negotiated with both houses of Congress, and then they're going to vote on it today to pass it into law. The primary story, and I'm sure no one has failed to hear about this in the media, are the tax cuts for individuals and corporations. So that's the main story. That's mainly what is being reported. But there is an impact on employee benefits, albeit not incredibly significant, because some of the things that would have impacted us were taken out of the bill. Some of the deductions that may have been taken away. An example there was discussion, or maybe it was even included in the House version of the bill, that the dependent care FSA flexible spending account would go away, that adoption assistance would go away as a deduction, that employers would not be able to pay for the educational expenses for grad school of their employees on a tax-free basis anymore. Those three items did not make it into the final law. So I think that's good news for employers and individuals. The biggest item that did make it in is that the new law repeals the ACA's individual mandate. So the requirement that has applied since 2014 that all of us and any American citizen was required to either get health coverage, minimum essential health coverage for the year, or pay a tax penalty. And that has applied for 2014, 15, 16, and it does apply for 2017, but it will not apply beginning with the 2019 tax year under the new law. The new law reduces the employer deduction for qualified transportation expenses. Employees can still pre-tax their own expenses for transit or parking, but the employer cannot pay for it on their behalf tax-free under the new law. And also, while very rare, there is a bicycle benefit that employers can pay that's being taken away in the new law. So the law is expected to pass today, should pass today based on what the media reports are. These are the employee benefits impacts. Nothing else needs to be said about that today. Now, end of the year deadlines. We'll two slides here, and then I'll show you the compliance checklist, and we'll move forward toward conclusion. There are no definitive set 12/31 deadlines, and this is the case most years. So really for employers, the only real end of the year deadlines are those that come with open enrollment for those employers that had open enrollment for a 12/1 new plan year or a 1/1 new plan year. And if so, they're in open enrollment considerations and deadlines, but there are no hard and fast December 31, 2017 deadlines. I mentioned the ACA reporting deadlines. Those will be the first deadlines in 2018 and certainly can be considered much like the W-2, W-3 process to be an end of the year process. Some employers have Form 5500 deadlines because the Form 5500 is due 7 months after the end of the plan year. So as an example, employers that have June 1st renewals, for which May 31st is the last day of the plan year, May 31st plus 7 months is December 31st. So those Form 5500s are due next week. And similarly, those plans that have July 1st renewals, June 30 as the last day of the plan year, add 7 months. January 31st is the deadline for those Form 5500s. So that is hopefully on your radar. As a quick refresher, Form 5500s are due for plans that, for all health and welfare plans that are not exempt. The most common exemption is that any health or welfare plan that has fewer than 100 enrolled employees on the first day of the plan year is exempt for that plan year. So plans that have fewer than 100 enrolled employee participants are generally exempt from Form 5500s, but any plan that has at least 100 enrolled employee participants on the first day of the plan year would need to file a 5500, and that's what's due 7 months after the end of the plan year. P-Corps fees, the bottom bullet point there, continue, and P-Corps fees have not expired. Importantly, that pesky required reinsurance to contribution fee, which started off as $5.25 per employee per month in 2014 and was built into full insured plans, and self-funded plans had to pay it directly to the government. That fee has expired. So no more reinsurance fee, and that's a big deal. That's a cost saver for employers. So no more reinsurance fee, but the P-Corps fee does apply for 2 more plan years. So the P-Corps fee is due July 31st of 2018 for any self-funded medical or health reimbursement arrangement that ended in 2017. So in whatever year the plan ends, that particular plan year, the P-Corps fee is due the next July 31st. The P-Corps fee depends on the amount of the fee, which is roughly $2.25 per employee for the year, per participant for the year, depends on when the plan ended. And if you want a more detailed summary of P-Corps fees, I'll leave you with this slide, and we've also got a one-pager on this, and I won't go into any more detail. But just to confirm, this P-Corps fees remain due for self-funded major medical plans and HRAs for the July 31 deadline. The other thing I'd say for end of the year, again, particularly for those of you renewing for 12/1 or 1/1, is just to make sure that the SPDs are updated. It's likely that the plan has new terms for the upcoming plan year, whether for eligibility or eligible benefits. The SPD should be updated along with the summaries of benefits and coverage SBCs for the major medical plan and HRAs. I think it's always a good time at plan renewal to assess, are SPDs in order? Do we need to wrap SPD? Those types of considerations. So I would certainly consider that an end of the year consideration, even though not a formal deadline. And any of you that have not seen or studied the IRS maximums for 2018 yet that apply to FSAs and HSAs and HRAs and other items, we'll leave you with these two slides. The IRS limits on the first slide, as you see here, including the health FSA limit for 2018 plans of $2,650. The new annual limits for the qualifying small employer health reimbursement arrangement that allows small employers without a health plan to reimburse individual premiums on a tax-free basis. More information available on that topic elsewhere if needed. The health savings account maximums and minimums there listed, as well as transportation, which is $260 a month. And then the ACA amounts that apply for 2018 as well. I'm not going to go through all these, but we'll leave you with a copy of the slides and the compliance checklist that we'll look at in a moment. And if any further information on any of these topics will be helpful to you, feel free to reach out to us. You can reply to the webinar email or email us anytime at compliance@probenefits.com. Now, the compliance checklist. Before we look at any slides, I'm going to just bring the compliance checklist up onto the screen there, and hopefully you can see it clearly. I know the text is not large in that format, but I'll try to focus it into the screen a little bit better. Typically what we do is try to focus on the key primary priority compliance items for the year, and we try to keep it simple. Now, you may say, well, there's nothing simple when you list 20 or so compliance requirements, and I agree with that. But what we have done this year in handling it slightly differently is to break it up basically into two sections. The top of the page includes Affordable Care Act items, employer mandate, IRS reporting, plan design, W-2 reporting, and then fees. And so that's the top of the screen. Keep in mind, this checklist is not meant to educate someone on everything about these individual items as much as it is to list the key elements that we should either be aware of, that we have to deal with, or that may not apply to us. And so as an example, we drilled this down to 5 specific categories for ACA. And I feel like that's a positive simplification of many complicated ACA items that many of which will not apply to your plan. So the top of the page, ACA items. No surprises there. The bottom of the page, general compliance, or viewed another way, non-ACA. And this includes ERISA and COBRA, tax benefit plans like Section 125 and HRAs and health savings account bank accounts. HIPAA, which continues to be a major priority. And then, of course, leaves of absence and annual notices, which are general compliance items that don't get nearly as much attention as these other categories, but are a big deal. Let me say a quick word about leaves of absence. In a recent article that I wrote in a recent training session that I have led that is called The 10 Most Common Compliance Mistakes by Employers, identified, and there's been no argument about this, that one of the key compliance mistakes of employers is not having a leave of absence policy. Particularly not having a leave of absence policy that complies with FMLA if it's an FMLA employer over 50. Not having a policy that addresses what happens to our benefit elections when an employee goes out on leave. Maybe the leave only ends up being 3 or 4 weeks, but that employee is inactive during that time. And how do we handle termination of coverage? For example, if the person goes out on FMLA leave, the 12 weeks of FMLA leave expire, the employee doesn't come back to work, when should coverage be terminated? By the way, the answer to that is right away, and COBRA should be offered. But these are mistakes that employers make, so I would absolutely have leaves of absence on your 2018 to-do list for benefits. And of course, leaves of absence is not only benefits, it's also employment related, and for all of these reasons, it's a valuable consideration. So this is the compliance checklist. Again, to confirm, on the handouts tab, which is under the control panel, it's near the bottom, you'll see handouts 1 of 5. There is a PDF copy that you can download right now and look at, or download to your desktop, the standard one-pager for this compliance checklist. But I wanted to show you what it looks like. I hope that this format and form is helpful to you. If you have any further questions or need further information about any of the items on that checklist, we'll be happy to share that with you. I mentioned the highlights already for ACA. Player pay, number 1, reporting, number 2. Those continue to be a big deal. The plan design items are certainly important, but a lot of those are handled for us by the carrier or the TPA if we've got a self-funded plan, making sure that we meet those maximum out-of-pocket limits, making sure that we have a summary of benefits and coverage, making sure that, for example, if it's a grandfather plan, that we know that we've got to keep on file and distribute a grandfather plan notice. All those remain important. No big changes to those issues. Now, for non-ACA items, a couple of highlights. HIPAA continues to be a big deal, and this will be something we handle in a separate webinar in early 2018. We'll have our 2018 schedule of webinars to be released soon after the start of the year. But HIPAA continues to be a big deal. HIPAA needs to be on your radar if you're a health plan sponsor. It's certainly simpler for employers that have fully insured plans than self-funded plans in terms of how much protected health information is being accessed by the organization, but it's a big deal for all of us, and certainly a big priority for ProBenefits. I want you to know about that. No legal changes with ERISA, but the bedrock ERISA requirements continue to apply. Plans need to have summary plan descriptions. They need to be updated, with plan changes. Plans need to file Form 5500s, as I mentioned earlier. And also, we need to consider, this is the next to last bullet point, that if we've adopted sometime recently a non-insurance program, such as a wellness program or a telemedicine program that might be separate from our group health plan and provided to more employees that are enrolled in the group health plan, we've got to be cognizant that these plans have compliance requirements. They may need a plan summary or SPD. COBRA may apply. As an example, COBRA does apply to telemedicine, and that's not something that all employers know. It's not something that the telemedicine providers will necessarily tell you. Wellness programs can be very valuable, but there are a number of compliance requirements that apply to them, including a new a new EEOC privacy policy for wellness programs that was issued with guidance sometime a year and a half ago, in which employers that have wellness programs with certain incentives and requirements must provide to employees. I mentioned COBRA compliance. I really can't say enough about the importance of COBRA compliance in this compliance era. And even though the law really hasn't changed with COBRA, the requirements continue to be a big deal. I mentioned earlier that one of the stories of 2017 has been COBRA litigation in some jurisdictions. I'm in North Carolina. The closest jurisdiction to me that has seen this widespread COBRA litigation is Florida. As an example, in Florida, one of the things that the plaintiff's attorneys representing former employees suing employers and organizations, one of the things they focused on is that the employer did not provide a COBRA initial notice. They should be provided to an individual when he or she first enrolls in a group health benefit, so either upon hire or upon first eligibility. That COBRA initial notice is not a priority for many employers, but it is a required notice that needs to be done. And so that's something very simple, that if you're working with a quality COBRA vendor like us, for example, and you're ensuring as the employer that new hire items and new enrollment items, just like the FLSA marketplace notice and other things that you have to provide to new hires, that this is done and this is important, and that all other required notices are done. And oh, by the way, that we are administering COBRA for all COBRA benefits, not just medical, not just vision or dental, not just HRA, but any other benefit that may be a group health plan under the terms of the law. Other than that new QSE HRA, small employer reimbursement option that was new for 2017, there are really no significant legal changes for Section 125 pre-tax plans or flexible spending accounts or health savings accounts or general HRAs other than the small employer HRAs. But the compliance items remain the same. Those plans need to be in writing. The summary plan descriptions need to be updated, for example, when a new benefit is added or when eligibility changes or any important plan term. And the plan needs to be administered consistent with those terms, that people that are eligible should be offered the benefit. Qualifying events for the 125 plan and pre-tax elections should be handled correctly. All of these continue to be important items. So they stay on the checklist even though they're not necessarily new items. In the interest of time, I'm not going to go into any more specifics on the checklist items or other details regarding anything on there. But if you have any questions, you're welcome to submit them now, and I'll stop in just a couple of minutes for the Q&A as we end the general presentation item momentarily. A couple of other current items of note as we finish the year and head into 2018. So that you know, the open enrollment for the health insurance marketplace ended on Friday, the 15th. And so any individual that wanted to have coverage in place by January 1st, 2018 had to have enrolled by midnight on Friday night. This may apply to some of your part-time employees. This may apply to some of your full-time employees, but just know that the health insurance marketplace open enrollment period has ended. Otherwise, it doesn't look like the marketplace will operate any differently for 2018. Subsidies are all still in place. There's no question that with the individual mandate going away after next year, that there could be a major impact on individual premiums in the marketplace going forward. But for 2018, everything is pretty much business as usual. I mentioned COBRA earlier. Another item that we had on our open enrollment checklist that I want to make sure to mention, just because it's a best practice item, is that we as employers should not forget that COBRA participants have open enrollment rights, not just open enrollment rights under the one benefit they may have continued upon termination, but any benefits that they would have been eligible for as full-time employees at the time they were employed with us. COBRA participants have open enrollment rights, not just to change the plan, but to enroll in a separate benefit or drop coverage in a particular benefit. So we need to remember that. And I see continuing issues regarding taxation of benefits, and some good things employers are doing, some mistakes employers are doing. We have a recent training session that we recorded to provide a full update and discussion of benefit taxation. So if you think that getting your benefit tax items in order would be a quality use of your time in 2018, this training session may be helpful to you. Otherwise, candidly, our best practices for 2018 don't look a lot different than they were for 2017. So if you didn't hit these items in 2017, you've got a mulligan to try again in 2018. First and foremost, obviously, continue to comply with all relevant ACA items unless and until the law is changed. The last bullet point, if you haven't already, address any HIPAA obligations. And it's never a bad time to revisit HIPAA. It's never a bad time to revisit COBRA as well. And I would put COBRA, like taxation of benefits, in the category of back to the basics, that we need to take time in 2018, hopefully in the first or second quarter of 2018, to get back to the basics and say, things have been complicated. We've all been busy. We're trying to run companies and take care of employees and do all the things that we are charged to do. But let us take some time out of that to get back to the basics and make sure that we're taking care of some of those key bedrock items of benefits and compliance that protect the tax-free nature of benefits, that protect the employer and ensure a limitation of liability, because we are executing the plans the way they should be executed and administering eligibility and benefits in accordance with the terms of the plan. So that is a quick run through of the end of 2017 and a look ahead to 2018. Here's a short list of tools that we plan to continue to provide to your organization in 2018. And from our team to yours, let me say a word of thanks to you employers that are working with us and you've trusted us with your business. Thank you. And we appreciate the opportunity to work with you. We are here to serve you in any way we can, and we thank you for trusting us with your benefit plan compliance. Merry Christmas and happy holidays to all of you. To advisors that are active in referring business to us, thank you as well for your trust, and we plan to do a good job for you and your advisors in 2018. If we can assist any of you, employers or advisors, on additional services, let us know. We are committing our full focus to plan administration and compliance. This includes FSAs, HRAs, HSAs, COBRA administration, premium only 125, and transit. A big priority for us in 2017 has been integrating with data platforms, and we are willing to integrate and receive feeds from any data or enrollment system or payroll system. So if that is something that is of importance to you, we'll be happy to work with you on that front. We're also committing to the highest level of service and compliance support. We also offer ERISA compliance services, Form 5500 prep and WRAP SPDs. Chris McCauley and I are the benefits attorneys at ProBenefits, but we're only part of a skilled and dedicated compliance team with a lot of experience. And we have a lot of good things planned for our services and compliance tools in the days to come. So thanks for your time today and for your business. And as I mentioned earlier, I am going to hang around for a few minutes to answer some questions. So if you either have submitted a question in the question box or would like to in the next few moments, I'm going to keep the questions open for about 10 minutes. So you're welcome to submit a question in writing, and I will answer that question in writing shortly. For those of you leaving us, again, thanks. And if you have a question, you're welcome to submit it to our compliance team anytime at compliance@probenefits.com. Thanks. Merry Christmas. Happy holidays.